I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, we've been getting a lot of headlines recently. We've got a lot of earnings headlines, we've got trade headlines. So with this kind of news saturation, what's the one thing that investors need to know?
Okay, what you have to recognize is you've got to get away from the day-to-day. Is this good? Is this bad? And I'll use the metaphor of IBM, okay? So IBM reported a quarter that had deceleration in a key category, cloud. And that caused a really terrific analyst, Lisa Ellis, to really continue with her sell. Then there's Katie Huberty, unrated, she's Morgan Stanley, Lisa Ellis is at Moffett-Nathanson, saying, look, it really wasn't that bad a quarter, and the cavalry's come to the rescue, which is Red Hat. So you have the glass half empty winning from, say, 9 o'clock to 9:40, and then the glass half full winning from 9:40 until now, and that's what you've got to get away from. You have to have conviction. My conviction with IBM, which is not an Action Alert name, just so you know, is that Jim Whitehurst, who is from Red Hat, will do a fantastic job, and he'll make it so you want to own the stock. But more important than that, Catherine, is the idea that you have to step back and say, you know what, that's wrong that IBM is down too. And what I've been emphasizing is don't buy anything that's up, right? Buy things that are down that are wrong. Like, you know, Honeywell was down at one point. That was wrong. United Health is down. That's wrong. When I say wrong, it meant that when you were on the call, they explained it away. Or in the case of IBM, they can't tell you what Whitehurst is going to do. IBM did not get all of this announcement they had on Monday, ATT. The data center, a lot of it went to Microsoft, all right? Now, some of that is they got this whole contract because of Red Hat. So what you're seeing now, and I would just wrap things up by saying this, if you are trading minute to minute and you're buying things that are up, I'm going to tell you you're going to be wrong. If you're trading minute to minute, which I don't even advise, stop it. Listen to the call. Make a judgment. Decide what you would do with the company with or without the quarter, which brings me to Netflix, okay? You look at what Netflix said, and Netflix basically told you, listen, we may not be Costco. This is how you have to analogize. We may not be Costco where they raised the price and there was no price sensitivity. We may not be Amazon Prime where they raised the price, there was no price sensitivity. We may not be Apple. I mean, these are all the subscription economy. So the question with Netflix is not content, it's not Friends, none of that's happening at Friends. The question is, okay, are they part of the subscription economy that has pricing power? This whole quarter has been noted by who has pricing power. Remember Watch. Walmart, Amazon, Target, Costco, Home Depot. They have pricing power. I wonder now, does Netflix have it? And that's why it was down 8%, then 9%, then 11%, and why I think that to be safe, you got to wait till down 15%, because now the whole crux, and they don't talk about these stories right well, the whole crux is pricing power. And I'm beginning to question the pricing power. And that is something you don't want because it's a subscription business. And I love subscription business. Software as a service, Salesforce. Subscription is key. And now I wonder whether their subscription doesn't have the pricing that I thought it did.
Not even with pricing, but also content, because the content aggregation and their original series, I'm wondering, Jim, is that enough for investors or anyone to go to use Netflix as their Saturday night you get something that turns out to be a little more episodic. They didn't drop enough good content in that quarter, so they missed by 50%. If Stranger Things had come out 5 weeks ago, would have better. See, I think, again, step back. The point is, if you have to rely on an actual model of building in Stranger Things or an Indian movie or something that's developed in Spain, it's going to be too hard. Now, notice this. I'm saying too hard versus too easy, not bad versus good. See, too hard is a stock where we have to sit here and figure out all this stuff. Easy is JP Morgan. JP Morgan reported a great quarter. Too hard is CSX. What did they really say? Was business bad or not? Union Pacific, hey, things are fine. So what you're looking for easy versus hard. You don't want good half full, half empty. That means what you need to do is homework, and if it is, and you look at it and you see that it's half empty, you buy because it's down. And I find that what I'm saying is this is a trickier earnings period than I thought. Witness the fact that the CSX CEO basically said that. But you can use it to your advantage. If you see stocks that are down of high-quality companies, it's really going to play to your advantage. If you don't panic and you've done your work or you know that you like the company. And this is an earnings period where it is uniquely designed for people, as I said in yesterday's call. Fortitude. Do you have fortitude? That's the crucial quality that you need. I urge people to go to yesterday's call. I thought it was our best.
So the call that he's referring to, just so everyone is on the same page, is our Action Alerts Plus, Jim's Action Alerts Plus members only call, which aired yesterday at 11:30. Now it's still on the site over on actionalertsplus.com, so you can rewatch it there.
You just go to it because I thought that Jeff Marks and I did. I mean, look, this has been now several years that we've done a club call, and this was the one that I think really captured what you want. Well, you're not. This is free, but what we do is we try to figure out exactly what you want, and we pivot and adjust, because that's the way I lead my life, and that's the way our team leads our life. And this was one where if you say, you know what, the market's giving me an opportunity, a la Honeywell when it was down, it shouldn't have been because of a particular line item that they really had said before, a la United Health, where they should have told you something beforehand about a particular contract, which is going to reverse United Health after people that sort things out. That's where the opportunities come in. Read your bulletins for those who are members.
I want to circle back to Netflix because I have one other question for you.
Important.
It is very important. This is a tricky earnings season. You just said that.
Sure.
What is it going to take for Netflix to make the investors their friends again?
Okay, great question. And I think the answer is really now, this is really the problem. It's going to be time. Because now you've got this, well, what happens when Friends goes? What happens when Office goes? Even though they said they were single digit, now you're going to wait and see. And wait and see means sell. And by the way, they're sending down all the subscriptions, sending down Disney, because now people are saying maybe this is much more episodic. One of the things that Bob Iger taught me is that there's probably 38 weeks that they'll dominate the box office slate in a weekend, and yet they still couldn't move Disney stock until you got Disney Plus. Netflix has so many that can dominate they talked about the Emmys and stuff, but the fact is, if you're going to forecast and be that wrong, then people just say, you know what, that's erratic. Erratic does not get the benefit of the doubt. CSX was erratic, okay? Union Pacific, not erratic. So there's forces like what's erratic? Fortitude, homework. These are all coming into play in a way that has been, let's say, highly unusual. Let's go back to United Health. United Health could be down 10 today. It could be, and it might not mean anything because there's one line. And it'd be down 10. So you have to say, okay, I have the fortitude to buy United Health. This will be one of our bulletins. When I think it's down enough. Netflix, though, is not fortitude. Netflix is now I have to wait and see. That's not as good as fortitude.
Let's just recap. So investors need fortitude. They need to pay attention.
Buy stocks that are down, they need fortitude.
They need to pay attention to the erratic stocks.
Erratic stock you can't pay up for. Erratic management you can't pay up for.
And what's the third thing that they need?
And then I would love to see people do the homework. Wait for the call, please. I mean, look, should you infuse your thinking with worldview? I have always said I like to run money for a 3 to 6 month worldview. Decide what your time frame is. I think if you can look at a 3 to 6 month, you will catch a Honeywell at 140, okay? You will catch a Spotify down 50 from here. That's your time frame, 3 to 6 months. Unfortunately now, I think Netflix is in the 7th month category. You may need 2 quarters because you got to wait for Friends and Office, and a subscription business is usually so good, and you get such comfort in it. I don't have comfort in Netflix. This stock is unlikely to want to go below 10% because there's too many people who have always wanted to be in it, okay? But
all those millennials.
We spent a lot of time talking, Jeff and Zeb. What is easy? Remember what's easy and what's hard. I don't like hard money. I like easy money. Hard money makes me nervous. Easy money I like. So easy money is defined by companies that are down that I know are good that shouldn't be. This morning, Lam Research was down 3. ASMLF, a similar company, was up 5. What is easy money there? ASMLF had just reported. Lam down that much when its analog was up. That's easy money. Johnson does a terrific piece. Martin does a terrific piece this morning about how good Taiwan Semi is, all right? Well, all of the microns are down, the techs are, no. Easy money is Taiwan Semi's calling a bottom. Those stocks were all down yesterday. Buy. That's a trade, but we do like NVIDIA. NVIDIA was down $1.50 when Taiwan Semi was saying hallelujah. Well, that's silly. So you can go buy NVIDIA. Easier money. Easier. Look, the easiest money is to go buy something like a Union Pacific when they're saying all these good things and it's still down from yesterday. I like that kind of money. So we have to grade how easy the money is. We have to grade that fortitude. We have to take into account whether somebody's erratic. These are all the things that we teach, and I love teaching.
And always do your homework. All right, Jim, that's all the time that we have for
Point out
today.
again, I mean, I think that when I like what I like to do, more than nothing else in the world, is to take a United Health, where there was huge insider buying. Look at the stock, decide whether there really was something new, and whether that's right or wrong. That is my bread and butter. So watch your bullet, because you're going to find out the answer.
Thank you for all that great advice, Jim. All right, that's all the time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now switching over to our Action Alerts Plus Daily Rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.